This is Matthew Cratter from Trader University, and today I want to talk about the biggest bubbles ever. And there's a question mark there. We often hear that Bitcoin's a bubble, but people who say this, they really have no way of falsifying their hypothesis. They stand by and say it's a bubble as they watch Bitcoiners get more and more rich. Or they compare it to the tulip bubble, not realizing that the chart of Bitcoin maybe looks something like this through the end of 2018, but now it's gone like this. And tulips never recovered and went on to hit new all-time highs. So that's a really big difference. But I also want to talk about, I thought of another way of approaching it last night. If you're finding this video helpful, though, I'd pause right here to ask you to just hit that subscribe and like button and maybe share it with a few of your friends. So I thought of another way of approaching this late last night, and that's to look at different currencies that have been in trouble. For example, the Argentine peso. Here's a monthly chart of the US dollar versus the Argentine peso. The question is, if you looked at something like this, would you say the Argentine peso is in, or that the US dollar is in a bubble versus the Argentine peso? When the chart moves this way, this is the US dollar strengthening. When the chart moves this way, it's the Argentine peso strengthening against the US dollar. Obviously, what we're seeing here is not a US dollar bubble on this chart. What we're seeing is actual capital flight out of the Argentine peso. People want to get out of it because it's being printed more and more. It's not a good store of value, and it really has infinite supply versus the dollar, which also has infinite supply, but the US money printers haven't kicked up into quite as high gear. So this is certainly, I don't know any economist or trader who would say that this is a bubble. What this is a perpetual demand for a harder form of currency. Harder in the sense that it's difficult to print, just like you can't print gold, for example. And so what this means is that people are moving their money out of Argentine pesos into the US dollar, whatever they can, and they're never planning on going back. This is a one-way chart. It's not a bubble. It's a one-way chart. Likewise, if we look at the US dollar versus the Turkish lira, Turkey's obviously been in the news a lot in the last few days as the president fired the head of the central bank there, who was trying to raise interest rates and keep the currency somewhat stronger than it had been. This is another one-way chart, though. You would not say that the US dollar is in a bubble here. You would say that there's actual capital flight by people who are looking to preserve their purchasing power, preserve their wealth, and get out of what's basically monopoly money in the sense of the game. So from that, after looking at those two charts, I think this makes a lot of sense when you look at the Bitcoin chart. Bitcoin is a much harder form of currency. It has a limited supply, 21 million coins, unlike the US dollar. And so when you look at a chart of Bitcoin versus the US dollar, I think it's very similar to looking at the Argentine peso versus the dollar or the Turkish lira versus the dollar, except in this case, it's the US dollar that is the inferior store of value, especially for the past 12 months when the money printers have really kicked into high gear. What we're seeing here is not a Bitcoin bubble. What we're seeing is capital flight out of a weak currency into a much stronger currency that can preserve purchasing power. We're seeing something very similar across all asset prices in the US. This is why we not only have inflation in things like lumber and industrial metals and food, but it's also embedding itself in asset price inflation. People who say the Nasdaq's in a bubble, it's been in a bubble since 2009 perhaps. PEs have expanded, but what we're seeing here is another form of investment that is a better store value than holding US dollars cash. And so as the US dollar loses purchasing power against real things, assets that are denominated in US dollars that are somewhat finite, stocks are not technically finite, you can issue more shares, but they're much better store value than bonds or cash. And so we really have this one-way train. There have been pullbacks, obviously, but it's basically a one-way train straight up with the NASDAQ. Very similar to the Bitcoin chart, very similar to these capital flow charts. Likewise with housing prices. The recession that COVID threw us into didn't seem to affect housing at all. In fact, the money printing that the Fed did has made the housing price chart look very similar to what the other charts look like, including Bitcoin and the NASDAQ, the QQQs. We can see that Bitcoin, it's this most scarce asset, and so it would make sense that it would appreciate the most sharply. And this is one reason why I'm most bullish on Bitcoin over everything else. What we're seeing here then is not a bubble in Bitcoin or in stocks or in real estate. We are seeing capital flight out of the US dollar that's seeking a safe haven store of value. You can't make any money in your savings account anymore. You can't preserve your purchasing power holding US treasuries, US government bonds. And so you have to seek out, if you're a sophisticated investor, if you understand how this is working and the inflation that is here and coming, you have to seek out these harder forms of stores of value. And the hardest asset out there really is Bitcoin, because you can never create more of it. Here's another bubble. This is a bubble, a strange kind of bubble that's really underlying everything else. This is the total U.S. government public debt. So this is the sum of all the treasuries that are outstanding. This has been a one-way train since the early 70s, when the U.S. left the gold standard. And we can see that the steepness of it has really accelerated over the past 12 months, the slope of this line. This is, in a sense, this is a bubble. The U.S. will need to always print more new debt in order to pay off old debt. This idea that our grandchildren are going to pay this off is absurd. That will never happen. There are just not tax revenues available for that. You could confiscate the net worth of all the billionaires in the U.S. and it would still just last you for a few months. So what really happens here, what is happening is the U.S. is living beyond its means. Tax revenue is about 3.4 trillion, and actual spending over the last 12 months is 8 trillion. So you have this gap, the budget deficit, which means that you're spending more than you're bringing in, of about 4.5 trillion. And so what do you do when you're not bringing in enough money and you're spending too much money? You have to go in debt and borrow the money to keep up the crazy spending. And this is what the U.S. government's doing. The U.S. Treasury issues debt. The Fed buys the debt with freshly printed new dollars. This is the M2 money stock. It's also a one-way chart. I guess we could say it's in a bubble, but it's not really something that's ever going to go down. In fact, it has been steepening, just like the U.S. debt chart has been steepening. So this is the real problem here. And if we want to add to this, we just got news this morning that Biden is going to roll out another COVID stimulus relief bill in April. So let's go back and look. We have a $4.5 trillion, hopefully I said trillion before, but these are all obviously trillions, a $4.5 trillion budget deficit. So this means that at least this much debt has to be issued to make up the difference. We just had $1.9 trillion stimulus package. Biden wants to do another one, and they say that this is in addition to his infrastructure spending plan, which is $3 trillion. So just these two combined, plus probably the third one, is as big as the current U.S. federal budget deficit. And this is one reason I say that I'm extremely bullish, because I'm extremely bearish. This is a situation that the U.S. can never recover from. There's no way to grow ourselves out of this. And the problem is we have Medicare, Medicaid to pay, we have Social Security, we have defense, we have interest on the debt. None of these are budget items that we can afford. We can't shut down the U.S. military. You can't do that when you're a U.S. superpower in an arms race with Russia and China. You can't not pay retirees the payments that were promised them. You'll have people starving and not being able to pay the rent or mortgage, and you can't default on your debt. So the only real way out of this is more and more money printing. And all this leads to is a very bullish future for Bitcoin and really scarce assets like Bitcoin. I wanted to end with this chart that was put out by Charts BTC. What this shows is the different halvings. So we have the 2012 halving here when the minor reward gets cut in half, the 2016 here, and the May 2020 halving here. The way the price works on this, the price scale, is each epoch is priced at 20x the previous one. So if this line here was 1,000, in the third epoch, it becomes 20 times that, and then 20 times that again. This is just a kind of a variation on a logarithmic chart, a different way of looking at it. But what this shows is assuming that this scaling continues. It shows where we are right now. Everyone who says they don't want to buy Bitcoin, it's too expensive here, we're really right at the beginning. My price target for the end of this year is 200,000, but we'll probably overshoot that, and especially if this looks anything like the 2012 cycle or the 2016 cycle, and we could definitely see numbers like 300, 400, 500,000 dollars per Bitcoin. So this is, I'd like you to share this video whenever one of your friends tells you that Bitcoin's in a bubble, so they can understand really what's happening when weak currencies compete against strong currencies. The strong currencies win, and it becomes really a one-way chart. You'll still have pullbacks. Bitcoin will remain volatile, but this is a chart that is not going to reverse in the same way that the Argentine peso chart never reversed, the lira chart never reversed. And I've gone through the dynamics in this video, the spending dynamics of the budget deficit, which shows why we could never reverse this. If we cut government spending massively, government spending is something right now, it's probably 20, 25%, 30% of U.S. GDP. If you scale back government spending very quickly, you'll get a very deep recession or deep depression. What that means is tax revenues will fall even more, and you'll also have a lot of civil unrest as people lose their jobs, as people are starving, etc. So the only solution out, really, and it's a very bad solution, is more money printing, the Fed buying all the debt on the margins that's issued by the U.S. government. And what this means is that this Bitcoin chart will continue. We're going to see Bitcoin in the hundreds of thousands, and then we're going to see Bitcoin in the millions, priced in millions of dollars. And I wouldn't be surprised in 10 years from now if one Bitcoin is worth approximately $10 million in today's purchasing power. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.